We are moments away from President Trump signing the Phase 1 trade deal. And I want to introduce our panel to talk about all of this. Yahoo Finance's Akiko Fujita and Emily McCormick, INTL FCStone Director of U.S. Institutional Equities and Global Market Strategist Yusuf Abbasi, and NYU Professor Scott Galloway. And if that wasn't enough for you, also joining us, Atlantic Council Nonresident Senior Fellow, Global Business Economics Hung Tran, and joining us as well. Hung, I want to start with you as we await this signing here of this document that we still have not seen. But I'm curious what you think is in it, first of all, that's most significant, and whether the Chinese and the Americans will be able to hold to it.
I think the most significant thing is the commitment by China to purchase an additional $200 billion of U.S. manufactured goods, energy, agricultural goods and services over the next 2 years. That means an almost doubling of the level of imports from the U.S. that China has been able to do. In the past year, 2019, China imported about $123 billion of U.S. goods. So I think that is the most significant thing. In exchange for that, the U.S. agree not to impose tariffs on the remainder of the goods, but maintain tariffs on about $360 billion of Chinese goods. Basically, the Phase 1 agreement is a good truce that lowers the temperature of the trade tension, but basically it doesn't attack and resolve the key fundamental problem in the relationship between the two economies, and that is the state-owned enterprises system and the industrial policy of China.
So we've got a good truce. I mean, the temperatures have been lowered, at least for now, but there's still a lot of questions, as you point out. One being a lot of issues with national security. You know, we heard from Stephen Mnuchin today saying that when you look to Phase 2, there could be a Phase 2A, there could be a Phase 2B. I mean, this is a long-term discussion, but he also said on the issue of tech questions like Huawei, that is running on a different track. So how do you expect the administration to tackle that once they get the Phase 1 signing out of the way?
Yes, as you said, there will be a continued negotiation on the Phase 2 agenda, which will be protracted. And the administration has indicated that nothing to be expected until after the November election in the U.S. In addition to that, there will be a variety of non-tariff issues that will come to the fore, including more control on imports of sensitive sector from Chinese producer, control of export to Chinese companies in sensitive sectors, and also more sanctions and so on and so forth. So those are the areas that we have to watch: the non-tariffs, control of import, export, and investment, which will come to the fore.
We had a guest on in the last hour who made the point, Yusuf, that we had tried for years with our partners in Europe to have a united front and discussion with China about changing the things that are now being forced. Mm-hmm. And that the only thing that worked was literally, for lack of a better term, blowing up everything with the tariffs and with and jostling the Chinese. Has that worked?
Yeah, I mean, listen, I don't disagree with anything that's been said. I think that what we've done is we've essentially gotten to a place where we understand that we can work with and talk to China in such a way that we can reopen some of these trade routes, trade talks, whatever it may be. The reality is so much of the heavy lifting is yet to be done, and the market has acted like all of it has been done. The other tough part is you hear it time and time again. It's very difficult negotiating with China because at the end of the day, things change, and as things do change, China tends to back out of agreements very, very quickly. And I think there's a history of that. I think there were Harvard Business School studies from the 80s indicating that negotiating with China is different than negotiating with any other counterparty, and particularly post-WTO China, right, after 2001. So.
I feel like there's questions here in terms of, you know, like on the one hand, we've got this Phase 1 signing that's about to happen. We're still waiting for the specifics. You could argue that at least between the governments, we're not going to see as much tension, at least for now, but there's still questions about what this means for U.S.-China business moving forward. We've already seen a lot of businesses, American businesses, who have said, look, we're going to start to shift away because we can't put everything in China anymore. And that's going to continue regardless of what happens in terms of the discussions between these two sides.
Right, and I think that's something that's really going to start showing up in the economic data, even more so than we've already seen. We've already seen that advanced good trades balance really starting to narrow to multi-year lows, but that's not only because of a decline in imports, but a decline in exports to China, and really seeing just a secular shift in the way of flows of goods because of this trade war.
Scott, I want to ask you about the tech community and its view on this, because I know they have had a fraught relationship with this administration, but are they viewing this potential trade deal positively, even as they perhaps are not fans of some of the other policies?
It's a correct question. I think that, so there's kind of two approaches. There's the Western way, where companies or countries allow big tech into their environment, into their markets. And quite frankly, a lot of markets are wondering whether that's a good thing. They look at their ad agencies, their newspapers, their retailers, and say, okay, these big tech companies have been an incredible vessel for the transfer of wealth from the rest of the world to the U.S. and then from the middle of the U.S. to the coasts. Now, in the case of China, they've decided to do it a different way, and that is they let tech companies in long enough to steal their IP, prop up a local entrepreneur, and capture the value domestically. And that sounds wrong, but who are the winners here? Was the Italian or European way the way to go, or was the Chinese way the way to go? So any economy growing faster than 5 or 7% a year has a core competence called IP theft. We did it in the 18th and 19th century, and now it's a core competence of China. Our ability to suppress that IP theft is a huge issue. But look at the biggest tech companies in America, whether it's Facebook or Google or Amazon. They've basically decided we can't play that game. So I think tech is of two minds around the relationship with China.
Mr. Tran, I am curious, looking forward, let's say 4 years from today, where will we be with all this? Will we still be negotiating phase two, or will there be some other issue at play?
I think that we may or may not continue to negotiate a phase two trade agreement, but I think it's clear to me that the relationship between the two countries will continue to be very filled with tension, and still many other issues to be tackled, not only in trade, economics, but also in a variety of points of contention, including military, including area of geopolitical competition.
Thank you very much. Atlantic Council Nonresident Senior Fellow, Global Business Economics, Hung Tran.